Hi friend, and welcome to Monologues with the Fire Dog. Today I want to talk to you about basic stock investing. Whether you are completely brand new to the stock market or have some limited experience, I'm making this video to help you build a foundation for your financial future. I'm starting a YouTube series from scratch centered around becoming the best version of yourself, starting with financial literacy and financial wellness. And that includes investing in the stock market, investing in your education, investing in your work, and most importantly, investing in you. So, why should you listen to me? I'm probably like a majority of you folks watching this video, working a day job, wondering how we can save enough for ourselves and not only be financially stable, but financially successful. The total amount that I save and invest is about 40% of my pre-tax income, and I'm well on track to becoming financially independent by age 45, which means that employment will be optional after that point, and my investments should be enough to generate enough income for me to live out the rest of my life. Almost anybody can learn to do it. The question to ask yourself is, will you? I'm here to provide you with free financial education to teach you what I've learned. Stuff that you won't learn in school or even most of YouTube. Mainly because I'm brand new to the YouTube scene. No one will be paying me to tell you to sign up for some app for 2 free stocks using a link below. That's truly not the first step of stock investing. I have no sponsorships, no CD sales tactics, no get rich quick ideas. I'll be authentic with you on how to build your wealth slowly. I don't do cryptocurrency, I don't do meme stocks, where people are able to make a lot of money or lose a lot overnight. I'm not going to sell you on a product or service you don't need. I'm doing this YouTube series as a passion project for you guys because a lot of my personal friends and colleagues have been asking me to share my knowledge on how to be financially savvy. So I have 8 years of investing experience. Ever since I started making a modest salary of $50,000 a year, I was able to invest $8,000 a year. So I truly believe that you can do it too. I'll teach you how to get a targeted average growth of your investments by about 7 to 10% per year. The first hesitation I always get from people with limited experience investing in the stock market is, the stock market can be up one day, down another day. I don't want to lose a bunch of my hard-earned money. It feels like gambling. And to respond, I would tell folks that I would never gamble with something as important as money, nor would I want to teach someone to gamble. You see, the stock market has a track record. One is correct to say that there is fluctuation of stock prices on a day-to-day basis. There are some periods where it can drop, everybody knows that. However, the main thing to keep in mind is this, time horizon. When you decide to invest in the stock market, you're committing yourself to holding the stocks for a minimum of 5 to 7 years, and some experts would argue that you should be investing for a minimum of 10 years. Meaning, once you buy stocks, you should not be selling them no matter what happens, up or down, at least for 5 to 10 years. It will be nearly impossible to lose money in the stock market if you're committing yourself for that long. Don't panic when stocks are dropping, and just as important is that you don't celebrate when they're high. Just know that these ups and downs are just background noise. Think about this. Why do you think the rich get richer every year? How much does your salary go up every year? We as wage workers sometimes even have to beg just for a modest raise of 2 to 3% per year, which, let's be honest, is not even really a raise when you take into account inflation. But the S&P 500, which is a group of the 500 biggest companies in the United States, including big household names like Apple, Google, Disney, Home Depot, Tesla, Microsoft, has been growing about 7 to 10% per year on average, depending on the time period. The rich invest. Rich people have multiple streams of income from their day-to-day job, from businesses, rental properties, maybe royalties, and of course, stock investing. The easiest of all these to get into is stock investing. If you put your money in a savings account over time, inflation will eat away at your money. And that is assuming you don't raid your savings account to buy something shiny first. Remember how movies used to be $5 a ticket or gas used to be $1.50 a gallon? Yeah, imagine you saved $100 in a savings account in 1995. What is it worth now? You could have bought 20 movie tickets in 1995, but even with a savings account, even if you count the interest, today you can maybe only buy 7 to 8 movie tickets with that same amount of money. Now, imagine instead that you invested that same $100 in the S&P 500 in 1995. You would have over $900 today. Hopefully by now, I've convinced you that with the right time horizon, stock investing is not a gamble, but an investment. Investments involve risk, that is true. And one way to mitigate this risk is by investing over a broad number of companies over a broad amount of time. You're guaranteed to lose money if you leave all your money in savings or checking accounts over a period of many years. While we must say that past results don't necessarily mean future gains, I think we can fairly say that companies in general will continue to innovate, grow, and employ and expand in the years to come. And if you think, for example, that Apple will continue to come up with updated iPhones that people want to buy, or that people will continue to go to Home Depot to buy building supplies, then one might say that you believe in the future of the economy. So when you invest, you're saying that you believe the companies you are investing in will continue to be successful. So now I will take you on a brief overview of the next actionable steps. So here's a quick and dirty. Step 1, get your company 401k or 403b match. 401k is if you work for a private company, 403b if you work for the government. Make sure you log in and choose to invest in something that says large cap equities. Look at the info sheet at expense ratio or operating expenses. It should be less than 0.1%, ideally less than 0.04%. That extra zero is crucial. Step number 2, get rid of any debt with an interest rate of more than 5%. Having that festering parasite will eat any potential gains you can possibly make from the stock market. So no car loans over 5%, no credit card payments, you must pay your credit cards in full every month, and preferably no student loan debt over 5% either. Step number 3, open a Roth IRA. I personally use Fidelity and Schwab. You can also use Vanguard. They're all good, it doesn't matter, just pick one. If you want me to pick one for you, pick Schwab. They have a nice checking account that lets you withdraw money without any fees from any ATM in the entire world. So you would put in $6,000 a year in your Roth, set up an automatic deposit into it for $500 a month, set it to buy shares of VTI, that's a total stock market exchange traded fund with slivers of stocks from 3,820 companies. Step number 4, max out your work's 401k or 403b, which is $19,500 if you're under age 50 and $26,000 a year if you're over age 50. Ask your company if that $19,500 limit applies just to your own contributions or if it includes your company match too. Comes out to be about $800 per paycheck, and remember this is pre-tax, so it's not lopping off $800 of what gets direct deposited into your bank account 2 times a month. You'll see approximately $500 less from each paycheck, but know that $800 is being put into your investing accounts. Step 5, open up something called a brokerage investor checking account at schwab.com. Again, I don't get kickbacks from them. I truly like them because they float on their own merits. They offer free checking, free checks, free ATM withdrawals from any ATM in the world. Then use the brokerage account to buy more VTI. Again, that's the total stock market exchange traded fund from the company called Vanguard. So you would set up automatic deposits of any amount that you're comfortable with, say $500 a paycheck to start, and then set buy orders of VTI, no matter what price VTI is that day. There's no limit on how much you can contribute here. I must reiterate, the most critical part of the process here is to set up automatic recurring deposits. I cannot stress this part enough, so I will say it again. Set up automatic recurring deposits. It's critical because then it guarantees that you pay yourself first. And that's it. Remember to trust the process, do not sell, happy investing, and make sure you subscribe to my brand new channel, and I'll see you on the next one.